Anyway, we should show this disclaimer so that you guys know that everything you're seeing is not one size fits all. These products are amazing. Everyone that's come along here is teaching us a little something that we can take away from this to hopefully make us better traders. But not everything that's being taught is actually for you. A lot of it's based off of what you can afford, how you can afford to. And I think everything today's been, I mean, like the classes have been super economical. Most everything's been economical. No one said that you should be investing more than you should. So anyway, so read the disclaimer. Please know that there are risks associated with trading on margin. There are risks associated with trading, period. So, only invest in this or property or anything else which you can afford to lose. Let's see. Let's go back over to the question and answers really quick. We got yes one. That was from a girl, I think, too. Pretty sure Mar is yes one. Bree is asking, how much was the power bundle again? The power bundle link is actually in the chat right now. That was Daniel's product. That's the machine learning AI thing. And that is, I think it was $997. It was either $997 or $999. I think it was $997, Omar.
It was $997, John.
It was $997, right? It was Bree.
Yeah.
All right. So let's go on to our next speaker. Our next speaker is actually, and this is no fluff, no BS. It's one of my favorite dudes in the entire industry. Jeff Tomkins is really a cool guy, and he's a heck of a trader too. Today he's going to talk to us about the secret to beating the markets using relative strength. Now, Jeff Tomkins is a professional trader with experience in stocks, options, futures, and he currently serves as a hedge fund manager for Altos Capital. And by the way, his website's at the bottom, which is Altos Trading. You guys can check it out right after the speech is over. Jeff founded Altos Trading LLC to help others achieve financial freedom through consistent and profitable trading strategies. Jeff has been trading since all the way back in 1999, and he's developed a set of highly tested strategies that have consistently produced results regardless of market conditions. Altos Trading's primary focus is to teach these disciplined strategies to individuals who are interested in becoming more consistent and successful traders. Through his expertise and his teaching, Jeff Tomkins aims to help others achieve financial independence through the power of trading. Now, before I bring Jeff out here, I'm also going to tell you guys, he's got a brand new product. I don't think he's talking about it today, but I'm going to be sending out an email to everybody on the list on Monday morning. You're going to want to look at your email Monday morning so you can learn about, this is the product that everybody in the industry is talking about. You're going to want to look at your email Monday morning so that you can see exactly what we're sending you. It's going to come from us. It's going to talk about Altos Trading. It's going to be from Jeff Tomkins. I want you guys to go. I want you guys to look at the product, and then I want you to email us and let us know what you think of the product. I think it's something revolutionary that you guys are going to love. I'm going to take the screen sharing out. I'm going to welcome Jeff Tomkins from Altos Trading. Jeff, how are you, buddy?
Hey, John, how are you? Thanks for the nice intro.
Oh, no problem. No problem. Hey, do me a favor. Before we go any further, can you just tell everybody the name? I'm not going to tell them anything else. Just tell them the name of the product, and we'll send it all out Monday so they can see it.
Yeah, so the name of the product is Zillion. So John will be sending you some information on Zillion on Monday morning, so keep an eye out. Appreciate the plug.
Oh, no problem. No problem. Listen, I've been talking to you and Richard about it now for the last couple of weeks. I'm excited. As soon as you told me about it, I'm like, look, I'll send it out to everybody when you're done talking. And Richard said, no, send it Monday morning. That's when it really matters. That's when it's the most important. So it's going out Monday morning, and then that's how it's going to go.
Good deal.
All right, you're up. I gave you screen share.
Okay, let me get my screen up here. Looks like it's still disabled.
Homa blew us up on the way out. Give me just one second.
Sure that she didn't saw the red button that said, in case of emergency, just blew the webinar up.
What does this end button mean?
Sorry for these delays, Jeff.
Oh no, that's fine.
So Jeff, try now.
Yeah, there we go.
Okay, so sorry.
No, it's fine. Technical difficulties happen, right? We could have some in my presentation, so it's entirely possible, but we'll hope for the best. So,
don't jinx
all right.
it.
Well, don't jinx it. Well, thanks, John and Rodrigo. It's great to be here. Welcome to everybody. I'm glad we got a few minutes to clear your heads because we've got some really deep dives here in the next hour or so. We're gonna make it worth your while. and actually start out with a little entertainment. So we got a nice little entertaining video to kick it off. Let me, oh, you know, it doesn't look like it's going to let me share the sound on my end. Let's see here. No sound sharing capabilities. Well, you're not going to get the music. I apologize, but that's okay. You'll get the gist. So we're going to be talking about the secret to beating the market using relative strength today. So again, apologize, there won't be any sound here, but here's a little entertainment for you.
I hear the sound, Jeff.
Oh, so you did get the sound. Good deal. Glad it worked. Well, hope you guys enjoyed that. As you can see, the margin between victory and defeat can be quite small. That's going to be the theme of our topic today as it relates to the markets. And it doesn't take a whole lot of an extra degree of edge to beat the markets, but it's not easy to do. But I'm going to give you guys a tool today to help you outperform the markets. I'm going to give you the entire strategy, the system, tell you exactly how it works, and you're going to walk away from the session today knowing how to do this on your own. So before we get into that, I'll give you a little bit of background on myself if you haven't seen any of my past educational events. Again, I'm Jeff Tomkins, and I have 23 years of experience trading the stock, options, and futures markets. Started when I was 5 years old. Pretty incredible, right? Back in '99. I received professional training at Morgan Stanley. So I interned at the trade desk at Morgan Stanley. That's where I really got my start in the trading world. Ended up founding Altos Trading, where I'm the chief investment strategist with over 60,000 members in over 100 countries across the globe. As John mentioned, I'm also a hedge fund manager. I manage money for my clients at Altos Capital. And I'm the founder and manager of some of the top performing options and stock alert services on the market today. And I'm going to be showing and sharing with you one of those systems that has performed extremely well over the very long term, but particularly even in 2022 when we were in a terrible bear market. So you guys are going to, again, walk away with a really cool strategy today that you can implement yourselves. Before I get into the strategy, I'll read you a quick disclaimer. We know that trading securities and options involves risk. And of course, prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options and need a broker to trade securities and must meet suitability requirements. We will be going over some various results together today. These are going to be actual results from the strategy that I'm going to be sharing with you, but they are past results, and we of course don't guarantee that those will in any way indicate future performance. And of course, due to the time critical nature of trading, brokerage fees, activity of other subscribers, we don't guarantee that anyone will mirror that performance shared from the educational presentation today. But numbers shown are based on trades that users can enter based on our trade signals and strategies. So by the end of our session today, you're going to discover how to gain the extra 1 degree trading edge that can put you ahead of some of the best traders and investors in the world. Believe it or not, less than 1% of professional money managers are actually able to consistently beat the markets, the S&P 500 index. So it's obviously a difficult endeavor. But I'm going to share with you, again, a strategy that's capable of doing that. So whether you're just starting out or a seasoned pro, this is really must-have information for today's markets. So we're going to talk about the 212-degree difference. As you saw in the video at the start of our session, at 211 degrees, water is hot, but it's still standing still and it's not doing much, kind of like stocks before they explode. Oftentimes we see stocks just kind of trading sideways, not doing a whole lot, and then all of a sudden they take off. And we may not know why that is, but they often exhibit that behavior. So as the temperature rises 1 degree and water starts to boil, it can create steam that can power a locomotive train. So it's incredible what that 1 degree difference in temperature of water can do. And it makes all the difference. It's kind of like when a stock starts to outperform a benchmark index or sector and then skyrockets. So we really see this occur in the markets rather frequently. Now, there's a number of ways to gauge this or to identify it. One of those that's commonly used is the relative strength index indicator, or the RSI. Many of you have maybe heard of the RSI or even used it in your trading and investing. And so, yes, it's a very commonly used indicator. And so I'll just kind of give you a little bit of background on it. But we're actually gonna drastically improve what the old traditional RSI does on our session today. So there's going to be a really unique way to use relative strength to identify top performing stocks. So if you're not familiar with the RSI, it's basically a momentum indicator. It's used in technical analysis, and it measures the magnitude of recent price changes to evaluate overbought or oversold conditions, the price of a stock or other asset. It can actually be applied to any asset. So it's displayed as an oscillator, which is a line graph that moves between two extremes. So it's what's called a bounded indicator, or bounded oscillator. So it has a maximum and a minimum, a max of 100 and a minimum of 0. It was originally developed by J. Wells Wilder. And if you haven't read the book, New Concepts in Technical Trading Systems, it's a great book. It came out in the late 70s, written by J. Wells Wilder, and he discusses his RSI indicator. Now, when we talk about the interpretation of the RSI, just like any other indicator, right? There's a lot of ways to interpret it, but the traditional interpretation is that values of 70 or above indicate that a security is becoming overbought or overvalued and may be primed for a reversal back to the downside, right? Or a corrective pullback. Now, a reading of 30 or below tends to indicate an oversold or undervalued condition. Now, as I mentioned, there's a couple problems with the traditional RSI indicator. So we're going to talk about what those are, and then we're going to solve them together on our session today. So problem number one is stocks can remain overbought or oversold for extended periods of time. So if you've ever used the RSI indicator, and let's say you were long a stock and you were starting to get readings over 70, maybe even up close to 100, and you're like, all right, this trend is starting to lose steam and the stock's going to go down. But then instead, it continues to go up and up, and you sell out of it, and the stock just continues to take off, and you're like, well, crap! I just sold out of a stock that's now going up even more because the RSI told me that it was overbought. This is the unfortunate aspect of a lot of indicators. They don't give us very timely indication of what the asset is doing. And this is a major problem with all indicators, but particularly with the RSI indicator. It's that old John Maynard Keynes saying the markets can remain irrational longer than you can remain solvent, right? So you can, for instance, own a stock and the RSI might be giving oversold readings, and you're like, okay, well, this thing's got to go back up because the RSI is oversold. But then it continues to go down, kind of the opposite of what we just talked about, right? And unfortunately, the market can continue to do what it wants to do longer than we can, survive that, unless we have unlimited funds, which most of us don't have. So this is what the RSI looks like on a chart. We're going to look at a number of charts together today so you can visualize this. This is a chart of Tesla Inc. It's a daily chart, and it has the RSI indicator plotted at the bottom. And you'll notice that in October, and this is a past chart, by the way, so don't look at Tesla and be like, whoa, I didn't realize Tesla's trading at $160 a share. But this is from a past chart of Tesla, and you'll notice that in October and November, the RSI had passed the 70 overbought reading, right? So the stock had been in an uptrend prior to that, and we see the RSI rising, and it starts to kind of flatten out there in October, November, and the RSI is saying, well, the stock's overbought, right? And then in December and January, well, the stock is going up, but the RSI is at extreme overbought levels, right? And so using the indicator, you might think, well, geez, this stock can't go up anymore. It's way overbought. But look what happened to the shares. They more than tripled. All right, in that time when the RSI was saying the stock was overbought. Well, that's not very reliable information because, again, a stock can remain overbought for as long as it wants to, as long as people are buying into the shares, right? Here's another example, Best Buy. So you can see that in May, the RSI indicator is bumping up against the overbought level at 70. July, August rolls around. It's way over 70. It's bumping up into the 90 level. But what's happening to the stock? It's continuing to go up, right? So yeah, it was overbought according to the RSI indicator, but it didn't mean that the stock was going to reverse direction back to the downside. In fact, it continued to go up, and the stock almost doubled in just a matter of months. Here's another example of Amazon, right? So the RSI indicator is exceeding the 70 overbought level in June, in July, but what's happening to the stock? It's continuing to go up, right? So do I want to rely on the RSI to tell me that a stock is overbought? Probably not, right? If you can find example after example like this, where it doesn't really give us accurate information of a reversal in the stock or when it's outperforming. So we're gonna solve this problem with the relative strength index, right? So we're going to use a different type of relative strength. And this is what it looks like. So this is, again, a chart of Amazon, but rather than telling us the stock is overbought, we want to know when it's actually truly outperforming on a relative strength basis. And so when that occurs, we're going to see positive relative strength numbers. And you can see that when we get those, the stock is actually going up. And then when we get negative relative strength, the stock is either moving sideways or going down, and it may not be the best time to get into the stock. Much more accurate. Now that leads us to problem number 2. The relative strength indicator only measures the current strength of a stock relative to its past price. So think about that for a second. Let's just pause and read that again. The relative strength indicator only measures the current strength of a stock relative to its past price. So what does that mean? It just means that it's comparing itself to itself. Now, why is that a problem? Well, if a stock is going up and we're comparing the current price to the past price, where the price was lower in the past, what is the RSI, the old traditional RSI indicator, going to tell us? It's going to give us higher readings and tell us that the stock's overbought naturally, because it's comparing itself to itself from the past. So if the price goes up, the RSI goes up. If the price goes down, the RSI goes down. Well, who really cares, right? That's the lagging component of indicators. So the same principle applies to a MACD or a stochastic, whatever the indicator is, it's comparing its current price to its past price. Well, we don't really need an indicator to do that. We can see that on the chart. And that's where a lot of people get fooled and tricked with indicators, is that they're comparing themselves to themselves. And there's a much better way to do that. And we're going to solve this problem. So here's the solution. Wouldn't it make more sense to identify a top performing index or sector and select a stock that is outperforming it? That way, we're not using lagging information and we're not comparing something to itself. We're comparing it to something else in the current market environment. Much more effective. And you'll see how much more effective this is, because that 1 degree difference can take a losing system and give it the steam that can spot the next stock that's ready to explode. And I'm going to show you proof of this. All right. So this is the 1 degree difference. Often when a stock begins to outperform a major index, industry, or sector, it goes on to make a big move up. And I'll show you how often that is, because it's a high percentage. And the key to identify stocks that shift from underperforming to outperforming relative to a benchmark index or sector. That's the key, right? So once we identify these, they can often be the golden ticket to beating the market. And so if you want to really know how to outperform the market, this is the way to do it. Now, I'm going to share some actual examples once I give you guys the system, because I'm going to walk through the 4-step system on how to do this so you can do it on your own. And I'm going to show you some examples from 2022, because when I teach this system, a lot of people ask, well, how does it do in a bear market? Because if the market's going down, usually it's dragging everything down with it. Well, I'll quote the kind of cliche from Jim Cramer, right? There's always a bull market somewhere. And when we're in a market correction or even a bear market like we were in 2022, relative strength can actually help us identify opportunities that outperform the broader markets. And this system has spotted some incredible opportunities in a bear market. recently in 2022, and I'm going to share those with you. So even in the worst market conditions, there are always stocks that are going up. They're just more difficult to find, but I'll show you how to find them. Okay, and this is where relative strength can help you spot them if you use the system that I'm going to share with you. So if we compare the new and improved way to use relative strength to the old traditional RSI, take a look at this chart again of Tesla, right? So Tesla was kind of moving flat in August, September, right? It wasn't really doing much. It was kind of oscillating sideways between $40 and $50. But then something interesting happens in around the third week of September, right? The RSI is moving up into overbought levels, especially as we get into October. But the new way of using relative strength told us that while the stock was previously underperforming, around the third week of September, it started to outperform the benchmark index S&P 500. Now, what was the S&P 500 doing at the time? Again, this is a past chart. It was actually going up, and it was going up a lot. So wouldn't we want to find a stock that's correlated with the S&P 500 that goes up even more? And this is what happened. Tesla went up over 1,800% in the coming months, when the RSI, moving into October, November, December, January, was telling us the stock was overbought. But the new improved way of using relative strength gave us much more accurate information, told us we should actually be holding on to the stock because it was continuing to go up. Here's another example of Teradata, right? TDC. So the stock wasn't doing a whole lot. It was kind of moving sideways there for several months until late January, something interesting happens. It begins to outperform the S&P 500, which at the time was going up significantly, right? So this stock started to outperform the S&P 500, and look what happened to the shares. They went up 125% in just a couple of weeks. Here's another example of Futu Holdings. This is actually an example of a trade I did in my hedge fund. So full disclosure, done in my hedge fund, out of the trade. This is from the past, no longer in this one, but I used this exact system to spot an opportunity on Futu Holdings when in early January, the stock started to outperform the S&P 500, right? And look what happened to the shares. They went up 380% in just a couple of months, right? So this is not lagging information. This is not comparing the stock to itself. This is really the correct way to use relative strength. And it really boggles my mind that people who use relative strength in their trading and investing decisions don't understand this. So now I'm going to give you the 4-step system so you can do this on your own. We're going to walk through each of the 4 steps. So step 1 is to identify a top performing industry or sector. And I'll show you exactly how to do that. Once that's completed, we look for stocks within that industry or sector, right? So we're comparing an asset that we're looking at trading to a benchmark industry or sector. Once we've screened for stocks, we compare the relative strength of each stock to an index or ETF that tracks that industry or sector. And then finally, we select a stock that changes from underperforming to overperforming. That's the timing component of the system. And this is where it can allow us to time within within a single day when a stock is starting to outperform. So the timing component, and of course, timing is critical in trading, is incredible. So let's walk through the steps. I'm going to kind of jump ahead on one of the steps here because I'm going to give you guys the formula. This is the formula for the new and improved relative strength system. All right. So it looks a little complex, but I'll walk you through it. It's really quite simple. So we're only going to have 2 data points. Data point 1, which is our stock price. And in our session today, I'm saying stock price. This can be applied to any asset. So we're going to say stock price, but it could be futures price or Forex price. This can be applied to any asset class. So that's data point 1. Data point 2 is our reference price. So that would be, for example, the index or the sector that we're comparing the stock to. So those are our 2 data points. Now, as far as logic, if the stock price, which again is our data point 1, is greater than 0, of course we want it to be, so we don't want to be trading a stock that's trading at 0, right? And our reference price is greater than 0, we're going to take a log value, and the log is just basically the stock price divided by the reference price. So again, that's our data point 1 divided by data point 2. And when we perform that calculation, it's going to give us our relative strength number. The relative strength is just the average of that log value. So again, stock price divided by reference price minus the log value length and EMA length. And for those inputs, we use an RS length of 90 days and an EMA length of 3 periods. All right. And then we multiply it by 100. And that's going to spit out a number. All right. And that number, if it's positive, tells us that stock price, data point 1, is outperforming reference price, data point 2. If it's negative, it tells us that it's underperforming. It's really that simple. Okay. So you just got to run a little calculation there, and it spits out a number, and it tells you whether it's underperforming or overperforming on that exact day. Now, the secret to finding the top performing sectors, I'm going to show you a really cool free trick to do this. It's a website called finviz.com. Maybe you guys have heard of it, maybe not. We have no affiliation with finviz.com. It's just a great free resource for a lot of different technical and fundamental trading and investing aspects. They do have paid subscriptions. You don't need one for this purpose. You can just use the freebie website by going to finviz.com. And what you want to do is you want to go to the groups tab at the top. All right. And once you click on that, this is not current. So don't look at this and think, oh, industrials is killing it right now. This is from the past. But it'll take you to a groups tab with a relative performance. And it's going to give you relative performance over different time intervals. So 1 week relative performance, 1 month, 3 months, half year, etc. Now, what we want to do here is we want to identify a sector that's within the top 3 across these different time intervals. All right, so if we look at this particular example, what do we notice? Well, over the past week, in this period of time, industrials was the #1 performer. Over the past month, it was at #2, outperforming the S&P by 6.25%. Over the past 3 months, it came in at #3, outperforming by almost 12%. And over the past half year, it came in at #3 again, outperforming by almost 30%. So when it comes to relative strength, wouldn't it make sense to look within the industrial sector and then find stocks within that sector, the industrial sector, that are outperforming the broader sector? That's a huge edge if you can identify those, right? It's kind of like a rising tide raises all ships. And this is a way to do that. So this is the step #1. I said I kind of got ahead of myself, but I wanted to give you the formula. And then this is how we find the sector to compare the stock to once we run our calculation. Okay, so that's the way to do that. So let's take a look at how this plays out when we implement the formula and then compare it to a benchmark sector. So again, example from the past, this is Builder's First Source, BLDR, and it's an industrial stock. And at the time, as we just looked at, the industrial sector was a strong performer. Well, what I did is I ran a scan of all the industrial stocks to see which one was outperforming the industrial sector. And you can use like an industrial ETF or a benchmark to compare it to, which is what I did here. And in June and July, this stock, BLDR, was underperforming the sector, right? But then around the 3rd week of July, something interesting happens. It begins to outperform. And I know the exact day that happens. And look what happens to the stock after it begins to outperform. It goes up 113%. Here's another example, Deere, another industrial stock. So I ran the calculations. I scanned all the industrial stocks within the sector, applied the formula. It spit out a number and told me that around the middle of July, Deere, DE, started to outperform the industrial sector. And it continued to outperform for a number of months. And look what happened to the stock. It went up 122%. Pretty incredible when you apply this. And I'm going to share with you some actual real life examples that I've sent out to our members using this formula and this 4-step system. But first, let's talk about locking in profits. So when we get into a successful trade, one of the difficult things with any trading strategy is when do you get out, right? None of us have a crystal ball. We can't see into the future. We don't know when the stock is going to stop going up. So what I like to do is use a 2-step approach. I use 2 targets. Target 1 is to set a 5 to 10% initial profit target on the first half of the position. Why do I set it that way? Well, as I'm going to share with you momentarily, a very high percentage of the stocks that I'm able to find that outperform make a 5% move rather quickly. Okay, so a 5% move is a very significant move in a stock in a short period of time. So I like to use that as my first profit target. But as we just looked at in some of these examples, a lot of these stocks can go up double or even triple or quadruple digit percentages. You know, the quadruple digit percentage gain isn't going to happen all the time, right? But when it does, we want to try to capture as much of that as we can. So for that reason, I use target number 2, a 10% trailing stop, to try to capture as much of the big gains as I can. So I use a scaling approach. So like if I were to enter a trade with 1,000 shares, I would set the first 500 shares to exit at a 5% profit target, and I would leave the remaining 500 shares open with a 10% trailing stop. And I find that this works quite well with the system. Another reason that I like to use a 5% profit target, because I'm an options trader. And if you guys trade options, this is a really cool system to use along with directional option strategies, because it helps us time the directional move. So whether you buy calls, sell puts, vertical call spreads, bull put credit spreads, calendar spreads, there's many strategies out there that can be applied to this system. That 5% move can make a big difference when it's done at a short period of time and applied to an option strategy, because a 5% move up in a stock can equal 100% options gain. So this is where you can leverage the relative strength system and apply it to options. So I'll show you an example of that. This is for APO, Apollo. So in kind of around mid-April, applying the formula to the stock, it began to outperform the benchmark index, the S&P 500, which was at the time performing very strongly, right? And as you can see, the stock went way up. So if we were to, for instance, buy a call option when the formula identified Apollo outperforming on April 16th back in 2019, again, S&P was in a strong uptrend and the stock closed at 29.66 that day. What we could do is buy a at the money 30 strike call, which at the time was trading for 170 per contract, right? And for the example, we'll just use 10 contracts. So to buy 10 30 strike calls at the time at 170 per contract would cost us an investment of $1,700, right? So a pretty reasonable investment on 10 contracts for Apollo. Now, we saw on the chart, the stock went up, the system identified on a very accurate, timely basis, a rise in the stock. And the stock went on to make much more than a 5% move, but it did make that 5% move rather quickly. In fact, in only 6 days, the stock was trading up 5%, which resulted in nearly 100% move in the option. So you can see that just 6 days later, that option had increased or almost doubled in value. And that $1,700 investment would have been worth an extra $1,650. Now, we can also apply the 2-target exit system to options. So in our example, we're looking at 10 contracts. Rather than exit all 10 at 100% gain, which would be probably most people would be happy with, right? What we can do is close half of the 10 contracts, keep the other 5 open until expiration on September 20th. Let's see what happens if we had done that. Well, the other 5 contracts, because as we applied the formula to Apollo, the stock continued to go up. It was continuing to outperform. So we're basically scaling out of this position through expiration. And those additional 5 contracts picked up an extra $4,225, right? So that $1,700 investment would have been worth over $5,000. That's a 297% ROI just on this one simple trade example. So this is kind of an example of how this can be applied to options. Now, guys, time is not money. And I often get asked, you know, why do you trade? Why do you teach your strategies to your members? And probably like most of you, when I first started trading, I was 100% focused on the money. That's why I did it, right? But then as I began to trade and I started to have some success after going through many, many failures, I realized I'm really not trading for the money. I mean, yes, that's you know why I'm ultimately doing it, but truly why I was trading is for time, right? Trading can be boring. Even successful trading can be boring. I get bored with it, to be quite frank. You know, it's not necessarily an exciting thing. It might kind of start off that way, especially if you're winning a lot of trades. But then, like anything else, you know, our brains adapt and get used to it, and it kind of loses its luster, right? It's excitement, and really we're just sitting there in front of a computer screen clicking a mouse. So this is why I like to design strategies that require as little time as possible and let us get out and do the things that we love to do, because we can't earn or create more time. We can earn and create more money and it replenishes, but we can never get our time back. And that to me is the true benefit of trading and why I do it and what we strive for all of our members at Altos Trading. So I used to trade my time for money, but now I trade so I can have time. And that's why I do it, because I like to spend time doing the things I love, like fly fishing. This is me out on the river behind my house. I love to go backcountry skiing in the wintertime, take trips to Europe. That's me in Venice. And I love taking my wife on trips. So we take a lot of trips, and trading affords us the ability to do that. This is me sailing out on the sailboat in the San Francisco Bay, my old stomping grounds. But these are really the reasons why I trade. And this is what we strive for all of our members. So now you guys know that when a stock gains that extra 1 degree edge and begins to outperform a top performing index or sector, it starts to boil and it often results in explosive moves to the upside. And I've revealed my 4-step process for identifying these opportunities, but it takes a lot of time and work to sift through over 5,000 stocks every week and to find the very best. And I realize that, and I've given you guys what you need to do this on your own. But if you don't want to spend the time to do it, I want to give you the opportunity for our team to do the heavy lifting for you. So what we do is we send out 5 to 10 opportunities just like this, the ones I've shared with you guys today, to your inbox and smartphone every single week. In fact, we just sent out a brand new one last night. So you get these picks. Our team does all the heavy lifting for you, and we simply send them to you, so you don't have to do all the work. And you can even take any indicator system that you're currently using and apply it to our top performing relative strength stocks. We have a lot of members who do that. They use other things that they like or that are working for them, and they'll write into us and be like, "Whoa, Jeff, I can't believe it! Like I was just kind of randomly using this system on a different stocks or the futures markets or the Forex markets, and I honed it in and just applied it to the picks that you were sending me, and like I couldn't believe the difference." So that's why we put this together, to help you guys hone in on the opportunities that really are outperforming the market. So that includes access to our best trades right to your inbox. So you don't have to sit and watch your computer all day. You can go out and do the things that you love, and they're sent after market hours via email and priority text message. So you'll never miss an alert that goes out each week, and you don't have to be tied to your computer. You can go out and do the things you like to do, and you'll get access to these with easy to read instructions, including profit target levels. And you'll get on average about 15 to 20 opportunities per month. So there's a plethora, an abundance of opportunities that my team uncovers for you and sends to you every week. So that includes the ticker symbol for each stock. You get the company name that we're looking at, the current stock price, our profit target 1, our profit target 2, and our analysis of why the stock is expected to outperform. So I said I would share some real world recent results with you, because probably the number one question is, well, Jeff, we were just in a terrible bear market last year. So how did it do? Or how's it done in 2023, right? So let me show you some recent examples. All right, eBay. I just sent this one out January 5th to our members. The stock was trading at just above 43 bucks. All right, by February 2nd, just less than a month later, it was up 21%. That's an annualized gain of 274%. Here's another one. American Airlines went out on the same day, January 5th. The stock was trading at $13.50. Just 13 days later, it was up to $17.64. That's a 31% increase, or 170% annualized gain. Just about a week later, on the 12th, I sent out another one to our members, Peloton Interactive. It was trading at $10.89 at the time. By February 3rd, it was trading at $17.83. That's a 64% gain in just a few weeks, or an annualized gain of 1,062%. Here's another one. This one went out just recently on January 20th, Truist Financial, TFC. It was trading at $47.82. Just 4 days later, it was trading $53.34. That's an 11.5% gain, or an annualized gain of 1,049%. This one went out on January 26th, Veritone Inc., VERI. It was trading on January 26th at $7.56 a share. By January 26th, by February 6th, it was trading at $10.99. That's a 45% gain, or annualized gain of 1,368%, right? Here's some more examples. XPEV went up 8% in 1 day. We sent out another one. Vail went up 11% in 4 days. DocuSign went up 12% in only 1 day. US Steel went up 16% 1 day. TECL went up 25% in 12 days. SGH went 31% in 5 days. MCHP went up 15% in 14 days. ESI went up 9% in 14 days. SGFY went up 13% in 7 days. So these are all examples from last year when we were in a terrible bear market. So yes, this can identify stocks that have the potential to do very well, even in terrible market conditions. And in fact, just this morning, I ran the stats for this service over the past year. So going back to the beginning of January 2022, during one of the worst market periods we could possibly select for this service. And guess how many stocks that we issued to, we issued, I think somewhere around 85 to 90 stock picks last year to our members. Guess how many of them hit their 5% profit target? 84% of them. 84% went on to make a 5% move. And many went on to make double and triple digit gains, as I've shared with you here. So that's a pretty phenomenal win rate in a bear market. So guys, as I wrap up today, I hope you got a lot out of the session. I want to offer you a very special package to receive my relative strength picks every single week for as long as you want. Okay. And so this is our relative strength signal package that includes our relative strength signal service with all the picks emailed and text alerted to you every week as they come up on our radar. And normally that retails for $1,499. Again, as I mentioned, you get priority text alerts to your phone. That's a $299 value. We'll send those to your phone, so you don't have to be tied to your computer. You get exclusive invitation-only Facebook group access. So we have close to 900 members in our Facebook group that trade this strategy and others that we teach, and you're going to get access to that private group, so you can interact with our members as well, share ideas. We're also going to throw in a lot of really good education to the package. So we're not just going to give you, the picks and say good luck. I've taught you one of my best strategies today on the session. I have many, many more great strategies, and I'm going to throw those in as well. If you guys trade options, we have a full comprehensive course on options trading that can be applied to the relative strength system, including trade adjustments to help you fix losing options trades. And normally that retails for $900. Again, we deliver all of the alerts after market close. So you guys there's no day trading or being tied to your computer all day. You get 15 to 20 picks on average per month. And ultimately learn to trade stocks and options with consistency, which of course we can't put a price tag on. We're going to throw in a couple of really cool bonuses. One is my professional trading series. This is over 9 hours of online content. You can watch it at your leisure. You never lose access to it. And again, it teaches all of my best strategies and systems. We only had an hour together today and I taught you one of them, but we have many, many more. I'd love to share those with you guys. So that's going to be bonus number one. It's a $595 retail value if you bought that from us right off of our website. This is another great complement to the relative strength system. It's my latest ebook, How to Create Risk-Free Trades. It's a great money management ebook that helps mitigate risk in trades, mitigate losses, and even create trades and by eliminating risk within the trade. And that's going to be thrown in at a retail value of $97 if you were to buy that from. In fact, you can't buy this from us right now. We've taken the offer down. So you're going to get that as a special bonus, but normally retails for $97. So a lot of value in this package. If you bought all of this from us off our website, you'd have to pay over $3,500. But today only for the I Love Trading event, again, this is going to go away today. So this is only good for today, $49 a month. So you get 84% off over the course of a year, and there's no contracts, no commitment. You can, try it out for a month, and if it's not for you, you can cancel. Very few, if any that I can even remember in recent past, cancel this after a month because they see how well that it works. But you're free to do that if it's not right for you. If you want to take advantage, you can go to altostrading.com/RS49. We are going to open this up only to 25 seats. The reason we do that is unlike, unfortunately, other companies out there, they just give you something and send you on your way. We are here for you, and we strive for the utmost in customer service, right? So we spend time with you to help you be successful, to help you get up and running, to answer questions. And unfortunately, we can't do that for unlimited number of people because we have limited manpower. So for that reason, we do limit it. It's not a marketing gimmick. We would love for everybody on the session today to join us, but it wouldn't be fair to you guys because then that would sacrifice our customer service. So the first 25 seats get the $49 a month offer. And again, that can be found at altostrading.com/RS49. So once you guys join, you're going to automatically be added to our members list and directed to the Trade Alert membership registration page. Once you register, you're going to receive a confirmation email in a few hours confirming your access. So you're also going to get members area access where you'll get all your bonuses and also be able to access the alerts. And again, I just posted my new picks last night, so you'll find those in the members area as soon as you join. And you get exclusive access to the members only portal where you receive your first alert again this week, as well as the 2 special bonuses. Bonus number 1 is our professional trading series. That's a $595 retail value over 9 modules and 10 hours of content with more of our strategies. So you got to learn one today. There's many more. You also get my free ebook. This will be found in the members area as well. So if you guys want to join, again, altostrading.com/RS49. And I'm going to throw in a guarantee. We're very confident about everything that we offer to our members. We've actually, I don't think we've ever been taken up on this that I can think of for the relative strength service, but we're going to offer it anyway. So if you're not convinced it's the best strategy for you, we will give you a full 30-day money back guarantee. So we're making this risk-free. You can try this out for 30 days. And if you decide it's not for you, paper trade it, see how it works, go back and look at the past results. And if you decide it's not for you, well, no questions asked, you can have your $49 back. So no problem. So we want to make it risk-free for you guys to try out. So again, altostrading.com/RS49. I'm going to open it up to Q&A here momentarily. And if I don't get to all the questions, you can always email us, support@altostrading.com, or give us a jingle at 1-800-895-9348. And again, that link is altostrading.com/RS49. Here's everything that you get with the package. I'll pass it back over to John and see if there are any questions that I can answer before we wrap up for today. And thanks again, everybody, for attending.